The stock in focus in the banking sector today was definitely ICICI Bank after its results over the weekend. Strong numbers across the board, whether you call it NII, PAT, NPAs, all of them looking extremely robust for the bank and giving the bank a good cushion for the growth in both quarter 3 as well as quarter 4 in FY22 that lies ahead of us. However, what has really stood out is that ICICI Bank has been the leader in the growth that it has clocked overall. So very strong growth that ICICI Bank has clocked, which is now the industry leading growth for the banking sector as a whole. When we look at how the stock performed or how investors reacted today morning, ICICI Bank was literally had flown off the radar. It was already at 800 rupees a share, a good 7 to 8% gain at the start of trade itself, and at progressively through the day as it increased, it reached a high of almost 860 rupees a share before tapering off to the 840s. So 10% plus almost 11% is what ICICI Bank has gained through the trading day today. Now when we look at how broadly the bank has sized up given this particular performance in the trading session today, it is now the 5th largest company in market capitalization on Indian exchanges, which means that it has overtaken Hindustan Unilever. Of course, no mean feat to overtake an FMCG behemoth to the likes of HUL. So a really good moment there for ICICI Bank, underlining what investors believe are truly really good results from the banking company. When you look at also how ICICI Bank pegs against HDFC Bank with regard to its quarter 2 numbers, the numbers are quite a standout. The loan growth for ICICI has come in at 17% versus HDFC Bank's 15%. The deposit growth too is at 17% versus HDFC Bank's 14%. The NII growth has come in at 25% versus HDFC Bank's 12%. Mind you, all these numbers are year on year. And the net slippages number has come in at close to 0%. Mind you, ICICI Bank has provided for net NPAs of 96 crores in this particular quarter. And what the management tells us is that it is largely due to the really solid recoveries made by the bank in Q2, and that underlines that net slippages for Q2 for ICICI Bank are literally at almost the 0% mark, where HDFC Bank is at 0.2%. The net NPAs currently stand at 0.99% versus HDFC Bank's 0.4%, and the RORWAs now at 2.9%, closer than ever to HDFC Bank's 3.1%. Mind you, the net NPA number for ICICI Bank is the best number it has posted in the last 7 years in percentage terms, which is 0.99% is what the net NPA number stands at, a 17 basis point improvement in a single quarter. Excellent performance there. And the return on assets on an annualized level is coming at 1.79%. Versus HDFC Bank's 2%, and there as well ICICI Bank has gained almost 25 basis points, and that is a huge number when you look at HDFC Bank's gain of only 10%. Of course, we have to underline the fact that HDFC Bank is a larger company, so the numbers are already far bigger, so the growth that it clocks is on a larger base. But nonetheless, a really good performance from ICICI Bank overall in quarter 2.